Hey, good morning, everyone. This is Frank Ochoa, aka Pivot Boss, with your Pivot Boss Pre-Market Report for May 11th, 2016. Here's a look at the daily time frame of the ES. I mentioned before, 2061s was very important to watch here. Being that we were right at the middle of the range, there was really no edge at that point other than the one thing that we had all been watching, which was kind of these bears defending off of the previous month's close. This is something we talked about before in that in an uptrending market, typically speaking, you'll see market participants come in and trap any aggressive sellers below the previous month's close price and then use those stops for fuel for the upside move. And you can see right here it happened again 2 months in a row, and then you saw the squeeze up. Before it was a very small squeeze, but nonetheless triggered a very big move. So we saw that again here, 2061s. And what was important there was that the buy stops were above that area, and so when price pushed through and started to trigger those buy stops above from those bears that had been defending the previous month's close, you saw a composite VPOT go bid, and that was a big time move right into 2077s. And so by the time this rally got really started here and we started to push higher and higher through 65, 67, 69s, that's when we started to say, you know what, we could be headed back towards 77.5, which is a very important key level. That's where the market attempted to hold above that level before and failed, and then the pullback precisely to 77.5 was offered back down to 2030s. So we've since seen a reversal back to 77.5. So this is an important area. Anytime you have a major trend day like this, where you see the stops come out, the usual approach is to defend the pullbacks early on for a shot at seeing a continuation of the trend in the next couple of days here. So right now you're already seeing some pullbacks being defended. There could be more, but as long as price remains above 61s here, any pullback into that zone remains a buying opportunity for a push back toward 2100. Taking a look at the intraday time frame for the ES, you'll see here we had a significant trend day that developed in the previous session, a nice continuation. We talked about that impulse Q range during our pre-market report yesterday morning. That impulse range played out very nicely. You can see price pushing through the top of that range here, becoming support, continuing higher into the 25% expansion. You can see how those levels became very important, failing just one tick shy of the 50%. And really, right now, this overnight low that we've seen so far in pre-market low has come precisely off the top of that level again, and that's where bulls defended. And so the expectation right now is for a trading range day to develop. Anytime you see a significant trend day the way we did in the previous session, the pivot range for the current session is rather wide. That implies that you're likely going to see a pullback from highs, and a likely trading range is going to develop. So we'll see how this develops throughout the session. The early idea would be to fade new highs, fade new lows. So if price comes back below 70, that could be an opportunity to fade it back up. If price comes up above 2078, 79, 80, that could offer an opportunity to fade it back down. So right now, overall, the major idea is to buy in the direction of the trend. So if price pulls back below these lows, it's a safer bet to buy it for an overall swing move higher toward those 2100s. Okay, let's take a look at crude. Here's crude oil. Looking at the daily time frame, you can see how tightly coiled this range has been this month. That's expected with the uptrending market we had the previous month. A wide set pivot range for this month implied trading range behavior. We've seen that play out throughout the month. But also, even when prices have been offered here, I had mentioned to the trading room and also in this report here not to be too bearish, because I believe that these bears here are becoming absorbed and they're becoming trapped. You're not seeing any push to new lows at this time. So I think that any bears that are defending off of the previous month's close here could see their buy stops run above 46s and into the next HV and above, which has been our target, 49s. And so that's going to be very important to continue to watch. Here's the previous month's close. You can see how prices below there. Those bears didn't get paid, and we saw a squeeze. Now we're starting to see the same thing. Bears coming in below the previous month's close, but they're not getting paid. That could lead to a tremendous squeeze and If that occurs, again, we're looking at that 49. 49.08 is the next HV and above. So keep an eye on this area here. Obviously, we saw a rejection of the pivot point for the month. We kind of popped up back above 43.85. It's been my expectation that if prices can continue to hold above 43.85, generally speaking here, the expectation would be for a move toward the 100% expansion target, and that puts you into the 51.10 level. So that lines up perfectly with an HVN. So I think the next key levels above could be retesting the LVN here at about 46.65, then 49 at the HVN, and then the next LVN above at 51. All right, let's see here. Any failure to hold above 42.60 opens up a return back to 36.60. So that's the fail. Let's take a look at the intraday time frame. On an intraday basis, we've had a wide overnight trade so far. In terms of ADR, we've only traded about 53% of ADR. We're trading about 97 ticks of a 1.83 point range. Now, average range, you can see here we had a move to the R3 standard deviation band perfectly, and prices have pulled back from there. We've seen almost a move to the outer deviation band on the bottom before higher load and rallied across the range. So overall, we've seen this thing kind of expand out a little bit. And typically speaking, if price can't hold above this previous high here, the expectation would be for an attempt to move in the opposite direction back toward the recent lows. So keep an eye on this previous high here, 44.76. If there's any rejection here, this lower high perhaps off of R2, anything in this nature here could lead to a quick move back to VWAP and perhaps back down within the range. Overall, given the recent strength, again, the expectation would be pullbacks as low as 43.85 to 44s. Could be great buying opportunities for a continuation to the upside ahead. All right, let's take a look at gold. Here's gold on a daily time frame. We've seen gold kind of gyrate back and forth here. We had a big time squeeze through 75s, hit our target at 1301.80, which is the 50% target. From there, we've seen a pullback and back and forth, back and forth. Overall, we've mentioned that 65 to 67 is the zone where bulls want to defend for a longer term squeeze into 1338 to 1341 and perhaps as high as 1400. However, it's been very choppy around here. I wouldn't expect this thing to really launch anytime soon. What's happening here is I believe that more upside is going to occur. However, you're seeing this market violently chop back and forth in order to throw off market participants. Every move up is violently seen with a counter reaction. A big move up, a counter reaction. A big move up, a counter. Big counter. And you're seeing a lot of these whipsaws. That tells me right there that there are a lot of market participants in here eager to get prices higher. However, in order to do so, sometimes you have to throw off some other market participants to loosen up the resistance ahead. And so that's what's happening right now. I still believe this thing is poised for much more strength toward 1338 to 1341. But right now, it's no easy trade. You're seeing a lot of fits and starts, and sometimes you just have to back off until the actual move starts to occur. Here's a look at the NQ. A daily time frame. We've seen a rejection here off the highs for a rejection day. That led us in the opposite direction. However, this has calmed down quite a bit and eventually bounced off our 4300s, which is the top of our key range. We thought that could be a last-ditch effort for these bulls, and it was. It was a last-ditch effort. You see the rejection day here, and ever since we've pushed back above the 43.55 key level, which is the level I mentioned we needed to watch the previous session. I said if bulls can reclaim that level, we could be headed right back toward 44.40 and perhaps even across the range toward the top. Very similar to the ES, not as poetic here. You've seen that all prices that were traded below the previous close, so any bears that got aggressively short below the previous close have been squeezed so far. And I would say any return to that area could offer an opportunity to defend at 43.30 for a shot at squeezing toward 4,500 to 45.23. So that could be a path higher here as we move forward. Even a retest back at 43.55 could be defended as well for a continuation. So the idea is after a squeeze day, you look to buy pullbacks for a shot at seeing a continuation. Failure to hold above the major pivot you're watching, 43.55, would suggest a failure of this move and could lead to a retest of the lows. So looking at the intraday time frame, so far you see that after the trend day, we've had a pullback. I think this pullback right here, especially when you line it up with the pivot range, implies we could see a move as far down as the midpoint of the previous session and still remain bullish overall. I think 43.55 is that key level here, so we could drop all the way here and still remain swing bullish, although I don't expect that to happen. It could play out. I would say watch the pivot point here, watch previous value at around 43.69s. That could be a zone here where we retest new lows, perhaps see a rejection, and then retry highs. Today could turn out to be a fade new highs, fade new lows type of day as the market digests the recent prices after the previous rally. All right, that's it for now. Let's see how this thing plays out heading into the new session. Good luck and trade well.